Hello and welcome back to The Note and welcome to 2016. We have a lot to get through because it's been a very busy start to the trading year. Now, stocks as a whole across the world were down almost exactly 2% for the day. Now, that's a bad day. Let's try to explain what was going on. First of all, we had a Shanghai surprise. Here you see the Shanghai Composite index, the main domestic Chinese stock market, and you can see it fell some 7%, triggering circuit breakers. The market actually had to close for a while, obviously creating very scary headlines. However, this really has very little to do with the economy. What I gather appears to have been the main driver behind the selling was that we have the end of the bar on big institutions selling that was instituted back there in July. That comes into force on Friday of this week. People appear to have been selling ahead of what they fear will be heavier selling from institutions to come. If we take a look at this next chart, however, there was another rather more alarming development for the rest of the world in the Chinese currency market. You may recall how the very sudden devaluation in the Chinese currency you see there in August triggered a mini crisis in the markets back in the summer. Well, that devaluation very much continues apace. Another sharp devaluation for the Chinese currency today. This is a trend that absolutely bears watching. It could put out a lot of calculations. Now, after the bad day for stock markets in the Far East, you saw a similar wave of selling in Europe. Very poor day there. And then you came to the States. Let's take a look at the FANGs. Facebook, Amazon, Netflix and Google, which as you can see had a spectacularly good year last year. All of these figures are relative to the market. And you can see that they led the selling today. Amazon sold off more than anybody else. Meanwhile, if we now go on to take a look at the two best performers for the day, Chesapeake Energy and Consol Energy, very much exactly the kind of stocks you would not want to be in. They had percentage rises of 8 and 10%, but as you can see, that's very much a bounce from a very low position. Now, there have been many concerns that the market was getting narrow, that the strength of the FANGs, these hot internet-driven stocks, was a sign that people were running out of ideas. But it's still a little too early to say that this is the moment when that whole market turns over. What it looks like so far is fund managers entering the new year and deciding to take gains. They will now have more than 12 months to work out how to pay the tax on those gains. They didn't want to realize those gains during 2015. Similarly, many will now have covered their very successful shorts. They'll be taking profits from 2015. Plainly, a lot of people made a lot of money shorting companies like Consol and Chesapeake. So far, this isn't clearly anything much more than a technical move in the market. Plainly, if we see falls like this for a few more days in a row, that would become very much more concerning. Finally, let's take a look at the ISM data, supply manager data. Very useful because it allows us to compare countries against each other. This looks at the manufacturing sector. Anything above 50 shows expansion, anything below 50 shows contraction or recession. And you can see something very fascinating is afoot. We had a very poor day for the stock markets in Europe today, but economically there are plain signs of recovery from a low base. It's very intriguing to see Italy, of all countries, doing the best on this measure. What is very concerning, plainly, is that both China and the US are now plainly in negative territory for the second month running.